you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset.
There is a possibility on the other side of this that inflation could actually be quite
Welcome
low.
back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in, and today we're going to go over the final year-end Redfin housing market review. And I'm going to tell you guys, I can start to figure out why the trajectory of the graphs are so misleading. So we're going to inspect what's going on exactly. We're going to see what Redfin has to say in their final 2023 housing market update. And if you guys can like this video, subscribe if you haven't already, shoot me a comment below and let me know your thoughts on the article I'm about to read, because you guys already know I absolutely love hearing from you. The name of this Redfin article is Housing Market Update. Home buyers' monthly payments drop to the lowest level in nearly a year, bringing back some house hunters. Always overly optimistic. So they're saying that's bringing back some house hunters, even though mortgage applications are sinking right now. So even though we have these low interest rates, right? Interest rates went so low. Well, demand is falling off a cliff right now. Now, before we get into the data, a few paragraphs from Redfin. The median US housing payment is down nearly $400 from its October peak, still way high from 2 years ago, just to clarify that, enticing some sideline buyers to get back into the game. Redfin's demand index, which measures early stage demand, is up 10% from a month ago. And it's important to understand that's not closed transactions. That's just people that are interested in purchasing. So again, they go on about the mortgage payment being $2,361 during the 4 weeks ending December 31st. That's down 14% or $370 exactly from October's all-time high. And that's the lowest level in almost a year. The weekly average mortgage rate dipped to 6.61% at the end of December, down from a 23-year high, oh my gosh, of 7.79% in late October. So again, despite mortgage applications absolutely plummeting, they're saying early stage home buying demand is starting to pick up as buyers take advantage of lower rates and home loans to choose from. New listings are up 10%, wow, year over year. Redfin Home Buying Demand Index, essentially just a measure of request for tours and other home buying services from Redfin agents, is up 10% from a month ago. Wow. Pretty optimistic. Let's go over this week's leading indicators. You guys can see the daily average, according to this article, is 6.7%, up from 6.45% a year ago, so elevated from a year ago. Weekly average sitting at 6.61%. Mortgage rate, again, up from 6.42% 1 year ago. Now, here's the really telling things. Here's how we can really look through the optimism, you guys. It's mortgage applications. Are people really interested in purchasing a house? We see that in mortgage applications. Now, that's down. That's not up. So already I'm like, Redfin, I don't know whatever you're smoking, but you need to stop. The people want truth. They want facts, okay? Because this is saying that it is down 5% from 2 weeks earlier and down 3% from a month earlier. So think about that. So they're saying, oh my gosh, all these, these buyers are coming, but the reality is they're actually not coming. And if we look here, mortgage purchase application are down 12% year over year. So there is some seasonality, but it's beating last year's decline. That's very interesting. And again, here's Redfin Home Buying Demand Index. That's still down 6% year over year. So at the end, they want to talk about how optimistic they should be, how great things are, and oh my gosh, rates are going down. But unfortunately, demand is down 6% year over year. Now, as far as searches for Google, that's up 3% month over month, but down. And think about this number. The US is just getting sick and tired of the housing market. The US is getting sick and tired of this. It's down 20% year over year. That is a huge drop in interest for houses. Now, when we look at this week's winners and losers, we have Newark. I can never pronounce this. It's never going to happen. I'm always going to make mistakes. You guys are with the slow reading group. Hooked on Phonics didn't work for me. It is horrible, but I'm pretty good in math. But number one, fastest growing metro area, according to this, is Newark, New Jersey at 18.2%. And that's fairly accurate for 2023. But when we go to the number two, which is Anaheim, up 18.1%, you can actually see the reality is Anaheim is actually down from peak. So Anaheim actually peaked at 1.092 million, and it's right now at 1.085 4 million. So it is down from peak. So understand that even though the year over year is saying 18.1%, if you purchase in Anaheim during the peak, you're down money right now. Now, number 3 is West Palm Beach sitting at 15.2%, Fort Lauderdale at 15.1, and Miami at 11.7. And one thing that I would say all of these metro areas have in common, other than the overwhelming unaffordability, except on the first one, the other 4 overwhelming unaffordability is the lack of new construction, specifically affordable new homes. Now, we don't have that problem in Texas. As you can see on the right side here, the top losers, wow. So Austin has finally been replaced. So I think this is the first week that Austin's been replaced. Number 1 metro area, you guys, and I've covered this area, Fort Worth, which is right next to Dallas. Fort Worth is the number 1 declining metro area at 3.1% down year over year, but from peak, it's way worse than that. Austin now sitting at number 2 at a loss of 1.7%. But again, you guys, that is down big time from peak, like over $100,000 down from peak. Now, look at number 3, San Francisco at 1.1 loss, and look at Denver is finally back up there. You guys know I did a boots on the ground video of Denver. If you want to check that out, go to my playlist, my Metro Report playlist on my homepage on YouTube, and I have a bunch of boots on the ground, eye in the sky metro area reports. But Denver is number 4 at 0.4% loss year over year. Now take a look at the new listings, guys, on the left side. So I believe that these metro areas are going to soften up as well as a result of new listings exploding, starting with Phoenix. Phoenix ain't out of the woodwork, you guys. Phoenix is in massive pain right now, and I should have that metro area video done in about a week or less. But Phoenix new listings are up 23.5%. Then Montgomery County, Pennsylvania, 21.9%. Austin just continues to take a beating. Austin is in real bad shape, sitting at a new listing increase of 20.9%, followed by San Antonio at 8.3 and Dallas at 16.4. You guys, Texas is in a world of hurt because of the inventory. Well, and obviously the massive equity run up in such a short amount of time, topped with absolute unaffordability for all the locals. So that's going to be a primary reason. But what I want to do now, guys, is let's visualize some of this data. And I want to point out a few inconsistencies about these charts. Now that we have the final year-end data, I can kind of see some patterns here on why these charts appear so manipulated. Okay, so starting with median sales price, you guys, it looks like we're going to end the year up 4.4%. Okay. And that is the difference between these numbers right here. Obviously, peak is down. Okay. So here's peak. So it is down from peak, obviously. But nevertheless, you guys, I'm blown away that we ended this year up at all, that we ended this year with any type of growth. So I was off when it comes to existing home prices. I was off on that because, again, we're ending the year according to Redfin's 4-week rolling average of median sales price up 4.4%. That is astonishing to me. But remember, you guys, how much does it cost to sell your house typically? How much does it cost? Comment below. You should know this, 6%. So is that really equity? Not when you count the 6% it typically takes to sell your house. Now, obviously, if it's less than 6%, you can make the argument that some people will make money. But regardless, you guys, we're ending the year at up 4.4%. And again, I've been questioning that data because I don't know whether or not they're including the 30,000 new listings for new home construction in this. I think that they are because remember they came out with that article saying that they're now going to include several new construction homes in their data. So I just don't trust this data, but nevertheless, I did want to acknowledge that it's ending the year up 4.4%. Now, as far as what's going on with the graphs, I think what they're doing is they're just extending the graph somehow, because if you look here, the 2023 line, that orange line right there, is going further than the other years. Do you see that? So it's extending past those years. So I think that they did something as far as like the longevity of that graph. I'm not sure, but if you go back here, you can see that the 2023 line and the trajectory actually passes the last 3 years. That's very strange to me. It's not supposed to be like that. Also, something that is very, very strange to me is how the median asking price for the second week in a row is now under median sold price, which is an indicator that going into these next few months and next few weeks, that prices will continue to go down because the median asking price, again, is under median sold price by $4,000. And I went back 4 years to see if this was a trend. And you guys, that's not normal. Although it happened last year, where we ended last year with median sales price lower than median sales price, the 2 years prior to that, it was not like that. So very suspicious. Median asking price, again, under median sales price. So odds are prices are going to go down. We can kind of see that in the median asking price. Let's move on to mortgage payments. So home buyer housing payments is actually up more than 5%. You see how optimistic they are when we read those articles? It's actually up 5.4%. So this is where we're sitting right here, you guys. And what I'm trying to explain to people is we don't necessarily need to look at that 5.4% year over year. Remember where we came from. The real difference is right here. If we look from 2021 to now, the difference in mortgage payment, you guys, is astronomical. It's probably around $800. So yeah, that is some relief from the peak right here. So we had the peak right here, but it's still way, way out of whack when we just look at payment. So if we need things to go back to normal, we need a combination of interest rates going down roughly another 3%, or an increase of income around 60%, or prices to go down roughly another 25%. All of those things adjust when interest rates go down or go up. Now, here's the thing, you guys, and I really want you to pay attention to this because this is so ridiculous. So here's a chart right now that is clearly messed up. All right, so this is clearly messed up. This is new listings of homes. This is showing an increase of 10%. You guys see this right here? Look at plus 10%. Year over year. But look at, guys, look at this. It's under, look at, okay, it's under 2022. The red line is 2022. So this chart shows us, and this is blowing my mind, you guys, why are they doing it? This chart, according to the projections of this chart, new listings of homes are under where we were at last year. According to this chart, do y'all see that? It shows we're under the red line, yet we're supposed to be 10% above last year. Again, I ask, Redfin, why are the trajectories of this data so wrong, so misleading? It looks like we're losing inventory, and yet you're saying yourself we're gaining 10% year over year new listings. But that's not what it shows when we just look at the visualization. Now, this one's correct. This is active listings of homes. Now, that is down 4% year over year. I was hoping that we would hit 1 million active listings this year. We got to almost 900,000, so we missed that, unfortunately. We're going into next year. We're probably going to have a lot of inventory. It's really going to depend on interest rates and what happens in the labor market and what happens with the sentiment of consumers. But right now, you guys, we are down 4% year over year, and that's not what we wanted, obviously. Now, here's another suspicious set of data. Again, this is not making sense, the trajectory. But anyways, guys, we're at 3.8 months of supply. That is absolutely wonderful. We want 4 to 5 months for a balanced market, and we want to maintain 6 months of inventory, or rather supply, in order for the market to be considered a buyer's market. Now, we have 9.2 months in new construction, and actually in my local housing market, we have 5 months in Houston. 5 months in Houston. In Austin, we have more than pre-pandemic, so things are changing. Nevertheless, you guys, we are at 3.8 months of supply, but we really want that to stay maintained. In order for that to happen, we can't have some giant rush of buyers during the spring with a limited amount of sellers. All right, so here we go again. Here's listings that had price drops. So we're at 3.9% of listings that had price drops. It's probably going down because people are pulling their homes off the market. It's pretty normal for this time of the year. But nevertheless, you guys are sitting at 3.9%. So that looks like it's hard to tell, but it looks like it's about the same as it was last year, maybe a little bit lower. But nevertheless, you guys, people are struggling to sell their houses. They're having to do price cuts in order to entice people to make offers on their homes. Now, not in every metro area. Remember what I'm saying. Every metro area is different. And likewise, every subdivision is also different. Now, here's the really intriguing thing, you guys. Redfin home buying demand. So despite prices, staying balanced at the end of the year, demand is actually lower. So demand is lower. Supply is about the same. Active units are about the same, but things are more unaffordable, and yet prices were balanced. Again, it doesn't seem right. It seems completely off to me. But regardless, you guys, Redfin home buying demand is down 6% year over year, is sitting right there. So demand is getting crushed, quite frankly. Now, I believe America is getting sick and tired of either talking about the real estate and housing market, or they've just given up hope. And remember, you guys, a lot of people say we can't have a crash if everyone knows about the crash. And so right now, people are dismissing it, just like what happened in 2007 and 2008. If you look historically at the interest of the housing market, right before the great financial crisis collapsed, society had the least amount of interest learning about the housing market crash. So it blindsided so many people because they stopped tracking the data and caring about fundamentals. They just thought home prices were going to go up forever, including this guy. I thought that as well. And so I lost my house. I had to file bankruptcy. I had to do a volunteer repo, and I had a tax lien for 9 years because the statute of limitations was extended because of my bankruptcy for 9 years. And I had to crawl myself out of the gutter. And what I'm saying, you guys, is you want to buy, go ahead. I'm saying that it's extremely toxic. I believe, in fact, I believe with all my heart that prices will collapse in most metro areas. Maybe not every single area, but in most metro areas, we're due for a collapse. I have no doubt about it. But what's really important is that you understand what's going on in your market and that you understand how to find a great deal. And if you're wondering, oh, what's the solution? What's the solution? You guys, I made a home buying course. I'm telling people not to buy, but I'm not so naive to think that everyone's situation is the same. I made a home buying course for free that I'm paying for to give access to you guys. Now, in this home buying course, it's going to teach you about credit, income, assets, purchasing power, how to purchase like an investor, what to look for, the differences of prices and payment, and then basically what your goal should be as a potential home buyer. So if you want solutions, put in the time, click the link in the description. And other than that, guys, if you're out there investing in real estate, you know that I wish you luck and I hope you win.